Good evening and welcome to the daily or to, I'm sorry about that. Good evening and welcome to the Trading the Tech Show. This is Derek with iLi Academy. I do apologize for the noise in the background, but the neighbors are being a little bit loud tonight. They're playing the music loud and yelling in the hallway. I don't know what's going on there, but we'll kind of get through our show tonight and see if, we can do that. We look at the Dow Jones this afternoon, closed at 237 and a half, up at 31,385.76. Our S&P 500 closed up 28.76 points to 3915.59. The NASDAQ closed at 131.35, up 131.35 to 13,987.64. And the Russell 2000 closed up 56.43 points to 2289.76. So as the futures pointed out today, we definitely had an up day. I think the futures this morning on the Daily Market Overview show was right around 106 points or so. But we definitely, eclipsed that as the day went on. So it's a good start to the week so far. We've got some definite trades that have been going off. We've been posting them on Facebook and on our Instagram page as well for the automated traders as they produce trades for us. And so far it's been very good. We're gaining a lot of equity as well too. I won't say a lot, but we're gaining some equity, which is wonderful as well. So that's what we need and that's what we look for, because we want our equity to catch up with our balance and kind of get to a place where we get that nice percentage and then we cut everything and start again. That's kind of the philosophy that we have for building accounts. And that's not something that's not planned. This is definitely planned. And the reason why I do that way is because it takes the onus off of having to, be right on every trade. I think traders look at it like, okay, I'm going to place this trade. It has to be right. When it's correct or whatever, I break even or I close it out, then I can kind of move on to the next trade, and that trade has to be right. We don't look at it that way. When I managed accounts, or when we managed our trading accounts on Trading Desk, we had portfolios of stocks that we had to manage. And not only are we managing those portfolios, we're not buying just for ourselves, just so that, the price goes up and down. We're market makers. So the stockbrokers are bringing us tickets and their customers are buying from our inventory. So I might go out and buy some, but I might not even have it that long because this stock is, a customer comes in or a client of the firm comes in and wants to buy stock. And so now I've got to sell it to him. So a lot of times, ahead of time, if we know for sure there's going to be demand for a particular stock, we're going to buy that stock in the market and kind of hold it in inventory. And as we sell it off, then we'll look to see what the demand is, and then we'll buy more from other market makers, depending on the price. And then we kind of mark that up to the customer, or at least try to sell it at a profit to our customers, because we're taking that risk on buying. If they don't buy it, then what do we do, with it? So we've got to do something else. So we're not going to make a lot of money. We're going to make maybe a little bit on the spread or something like that. Sometimes maybe we've got the buyer and the seller, because we've got sellers too. So we don't only have buyers, we've got sellers too. So sometimes our clients are selling us stock, they're selling it in at a certain price, and then we're moving it out at hopefully an offer price that's a little bit higher, so that we're making that money in the middle for doing that transaction. And that's how a trading desk would make money. So with, hundreds of positions, because we've got like hundreds of stocks that we're working with at any given time, we've got to keep track of that, but we can't rely on every single trade. Every single position has to be positive. We can't do it like that. We couldn't do it like that. So we just look at the overall account, and as we're making money on other positions, sometimes we're making great money on some other positions, we take that. And if there's some positions that are not doing so great, or something where the demand kind of went away and we got stuck with a bunch of stock for whatever reason, and we weren't able to sell it in the street, not typical, but if we had that situation, it happens once in a while, we would take some of those earnings and those profits that we've made, and we'd use those earnings from the profits to pare down the loss trades, or to take our haircuts on the loss trades. And so that's how we would manage the account. So it wasn't about every single position or every single trade we made had to make money. We tried to maximize that, yes, But at the same time, there were so many moving parts that we had to manage the account as a whole, not in pieces. So we look at it and say, okay, once we're up about this much, then we can take this part of the profit, take care of these lost trades. It balances us out again. So we're not attached to the money. We don't get married to the money. We don't get married to the trades. We don't get married to our balance per se. We're looking at our equity, and we want our equity to grow. And so we're managing for the growth of equity. And so, but we're building balance, because as long as you're building balance, you've got money that can take care of some of the lost trades. So that's another facet to managing your account that you might not, that's kind of information you might not get from someone else. They're telling you about stop losses. Oh, put a stop loss so that you don't lose too much money on your account. But they're not telling you about building the balance in your account. Don't worry about this lost trade over here. Make money on your other trades, and then take some of that profit and kill the lost trade. And a lot of times with that focus, what that allows you to do is especially in the Forex market, is allow the market to come back and actually help you to get out of that position. It might get close. It might get within a certain dollar amount. And now all of a sudden, the excess money that you have, that you've made in your profits, you're not going to use all of that excess money to actually get out of this position. You've kind of built that position, that balance up. And now, because you've been building the balance, the market has had time to reverse the trade that was negative against you. And the market itself will give you a lot of that negative trade back. It's going to give you back some of that equity or whatever. And then you take part of your profits and you cash out the trade. You take maybe a lot smaller loss than what you would have taken if you just stuck a stop loss on it, or you just got out. We never get out of trades without some type of advantage to the account. It's got to be some type of advantage, some type of growth in the account before we exit trades. That's the way we look at it. Now, if it's just an errant trade, for sure, and the direction has changed, or maybe you traded in error, you didn't follow the strategy or something, you definitely want to be able to get out. We're not saying that you can't get out in those circumstances, but typically what I want iLi Academy traders to look at is, how is it advantageous for me to get out of this trade? How does my account grow if I get out of this trade? What's it going to do to help my account grow? Even if it's a loss trade, it's going to help you because it's going to give you back free margin, number one. But how can I get out of this trade in a way that's effective enough for me to make money, or to continue to grow the balance of my account? It's not hurting my account. How can I use my profits to get out of this trade instead of using my equity to get out of this trade? It's a whole different ball game there. And when you change your mindset to that, you don't freak out when you have bad trades, or you have trades that just didn't go the way you expected them to go right away. You don't freak out about it. You just kind of let it be what it is. You know that you're going to work that position a little bit later. It's the one that, makes you angry every time you look at it, and you kind of roll your eyes at it, but you don't let it get to you emotionally, to the point where, you're freaking out about it. You don't have to worry about it. It's just a position that didn't work out. Whatever, we're going to go over here. We're going to keep making money over here. And then when I make double that amount of money or whatever, or when I make that amount of money up, I'm going to take that amount of money and get out of that trade. But we always want to be moving the account forward, 5%, 10%, whatever it is. We can cut the balance to those percentage points and always get out and start again. Because when you start over and when you're starting fresh is the time when you build balance the fastest. It's when you make the most money. Because as time goes on, you're going to build a lot of trades that aren't so great, right? You're going to be stuck in those a little bit, but you're still going to be building balance or whatever. It's going to get a little bit slower. But then once you can kind of cash out, then you're back to that beginning slate again. So you always are trying to get back to that beginning slate, because that's the fastest place where you're growing balance. And you're gonna, and if you set like your baseline, you say, okay, I'm at $700 now. My baseline is going to be $700. So now you're at 750. Okay, I'm going to use this 50 to cut some trades. I'm going to use, 25 of this 50 in profit, and I'm going to over 700. I'm going to cut those trades, but I still have my baseline 700, which might represent 10% growth of the account. So you always kind of keep yourself where you've got that growth in the account, but at the same time, you're building balance and cutting and trying to bring your equity up. Okay. So hopefully that makes sense for you as you start to trade. But that's kind of the philosophy for us behind managing your account for success. And so sometimes it's going to happen very fast. Sometimes it's going to be very slow. You're that process, but you stay in the process. You understand why you're in the process. For me, it's very easy because it's just what I was used to doing. It's what I used to see. But I know for a lot of traders, especially new traders coming in, they don't have any clue of how to do it that way, because most everything somebody's teaching you online is how to pick the perfect entry and how to have it go, hundreds of pips and make you a lot of money. They're not telling you how to manage your account for success. They're just telling you you're going to have wins and losses. They're not telling you how to manage an actual account so that it grows. And I know that this works because having worked and done it professionally, but I also saw what it did. I mean, when I came into the one office that I worked in for international assets in Winter Park, Florida, as a foreign, we did foreign stocks there. We didn't do anything, almost nothing domestic. We didn't trade really anything on the New York Stock Exchange. We primarily traded like ADRs and things like that for Australian stocks, Singapore stocks, Hong Kong, Malaysia. Those were our markets. Those are the stocks that we marketed to our customers. Every once in a while, somebody did something on the Dow, but just, but if it was an ADR or something, we traded on the Dow. But, if it's not a foreign stock, we typically weren't in it. But I saw what happened when we came in. I think when I came in the door, we were at like $1.4 million in accounts. So our accounts were worth $1.4 million. And in 4 years, I think 4 to 5 years, we were already at almost $4 million, somewhere between 3.4, 3.5, I think, $million or so, at one point that I remember. So like literally within a couple of years, like we're adding, you know, $750,000 every single year, growing our accounts this way. So so I know I saw that and I'm like, okay, this is how you manage the account for growth instead of individual trades. You're not going to win taking individual trades and thinking you're going to win a large enough percentage in order for you to to win, to be successful. That's not the way to be successful when trading Forex. You're gonna need to manage the entire account as a whole and manage the percentage of gain in the account. All right, so let's look at some charts. Hopefully that sunk in or made some sense to you. If it didn't, definitely contact me. Let me know what you think. But let's look at some charts and just kind of find out where we are today and what kind of direction has set up. It is Monday night at this point. So we're starting to set some direction for the day and kind of seeing which way, for the week, and we're kind of seeing which way things are going. So on this Aussie CAD trade here, we see that we're trading well above our 720 now. All of the moving averages except the 200 are above the 720. So we're going to keep an eye on this. I still have a sell stop here that was based on this 200. I'm going to go ahead and slide that sell stop up here to the 200 where it is currently right now, right around this 97.79 area, because that still is the preferred direction. The preferred direction is still to the downside because my longest term moving averages are still to the downside. The 200 is still below my 720. So until my 200 really jumps over the 720, I'm not changing direction because I know that long term, this is the direction we're going in. So I'm going to leave it there. Now, if the 200 continues on and the rate continues on above the 720, the 200 continues on and jumps over my 720, I can delete this order because I'm not at risk for this order to be executed at this point. The rate is well above the entry point. So what we're looking for is whether or not the overall direction kind of takes over at some point in time, and that's where the momentum will be. So it wouldn't take long for the price to drop back through that 720 and then those moving averages start falling back down. We see that all the time. We definitely see that all the time. So it's not a far-fetched thing. So if you're placing those orders, it's not in vain. It's like, one morning you could wake up and go, oh, wow, what happened? But it's trading in the direction of the overall trend, in the preferred direction. Aussie yen, we're trading above our 720. We've got a wide open trend to the upside. We're waiting on pullbacks to the 50 and the 100. Right now, we haven't gotten it. We would have had to trade way back on the 5th of February or so in order to get that. That would have been on Friday, would have been the opportunity to get in, and we would have had a nice trade to the upside here. But we haven't got an opportunity really to trade since then because the trend is in so strong. But that's a good thing because that means that you would make money on that. Now the Aussie New Zealand here, you can see that we traded just a tiny bit above the 720 between yesterday and today. We just kind of were flirting around with above it, but now we see this big red candle pushing back below. All the moving averages are still below the 720, so below the 720 is where we're looking to trade here. We're looking to trade short. So I've got a sell stop here that was based on our moving averages yesterday. What I'm going to do is I'm going to slide that up here. Since the rate is sitting on the 50 right now, which is in blue, I'm going to go ahead and drop my my order here, just modify my order here to the 100. I want this rate to continue to move down and commit to a move to the downside before it places me in the trade. And my preferred directions to the downside because all of the moving averages and the rate are below my 720. Okay. As far as the Aussie US, we're trading above our 720 here. We've got all the moving averages kind of moving up as well above the 720. They're kind of in order to the upside. So there's still going to probably be some upside momentum here, but our 200 is below our 720. So I'm just going to improve this order to where the current 200 is, right around this 76.52 area. And that's going to be my short order. Okay. If the 200 jumps over the 720, we delete the order and we go. Now we look at the upside, but our 200 is still below the 720. So our preferred direction is still to the downside. That's the overall direction of the river at this point. CAD yen, we're trading here above our 720. All the moving averages are above the 720. We've got a little bit of a mess here. We're trading off to the right here. All the moving averages are on top of each other. The 200 and the 100 have some separation between them. So if we pull down here to about this 200 somewhere down here, then I would place a buy order on this 100 or where this 50 and 100's at up here near this 82.57 area or 82.56 or whatever it is. I'd be buyers there. But right now, because of where the rate's at, I'm not going to risk that. I'm not going to take a market order right there. I need to see a pullback. As far as the Swiss yen, you can see that we're trading above our 720 here. You can see that we had this sell stop order on below the 720, but now all the moving averages are above the 720. That tells us that our overall direction is to the upside. We've got rate above the 720. We've got all the moving averages above the 720. Doesn't mean it's going to stay that way, but right now that's what we see. So we can take this sell stop order, just right click and delete it. But that's great because you're placing that order there just in case it goes back into the preferred direction. But if it doesn't, it was the preferred direction last night, but now it's no longer, that's fine. We're just not involved in the trade. So right now our opportunity will be these pullbacks that we're getting here past the 50 or the 100. We've got those pullbacks now. We've gotten a couple of pullbacks down here towards the 720. Past the 200. So if we get that again, we can drop an order here on the 100 or on our 50. So, we'll be waiting to see. I'm not going to place a market order here just because it doesn't make sense to place a market order at this point in time. We don't place a lot of market orders at all when we're trading. We use pending orders because we want that momentum in the direction of our trade. It's just one of the rules that I suggest that you don't break. Because you're going to take that one trade that's going to, not go so well. And you're going to look at it and go like, you know what, I dropped a market order that wasn't part of the strategy, and it'll shake you a little bit. And I don't want your confidence shaken. I want you to do it the right way so that your confidence will always be strong. You'll know exactly why you placed your trade the way that you did and why you got into at the price that you did. And you won't have any question about it because you're in the flow of and the discipline of the strategy. Now for this Euro Aussie, we're trading below our 720 here. We've got all our moving averages in order to the downside here. We've got something interesting going on here. I'll kind of point that out to you. We are waiting for pullbacks past the 50 or towards the 100. We got that yesterday. So we did get one yesterday where we pulled back here towards the 100. We could have dropped our order here to short on the 50, and that would have paid us pretty quickly and paid us pretty strongly. We've got something going on here. I see we created a new low here. So, and then we've got this arch. I call this like an archway. As I like to see the candlesticks kind of roll over here, kind of create an arch, and then come down and retest this low. If it cannot test this low, if it can't break this low, then we might have breakout bounce and it might trade off to the upside. So that's one thing that we see, as another type of a trade. So I'm gonna go ahead and insert like maybe a quick rectangle in here. I typically like to use the bottoms of kind of the archway. This is kind of where most of the trading has occurred. So I'll kind of draw it in maybe like this, maybe like that. Oops, why did it change? It's not quite as much as what I need it to be. Okay, let's draw it back down here. There we go. All right, so that rectangle represents the space where we might be interested in entering the trade. If this low is not broken, then somewhere we would be buyers here, and if it bounces off to the upside. So remember, we're trading against trend. In this situation, we're trading against trend. We like to find them when they are in the direction of trend. We like to find that, but sometimes we're going to do this in opposite of the direction of trend. Doesn't mean that we can't do it. It's a different strategy. This is the breakout bounce strategy. So we're going to look for those situations, and then if it bounces in that direction, that's perfectly fine. But we definitely want to recognize that we definitely want to recognize that we're trading against trend. So since we're trading against trend, we want to break that even pretty quickly. We don't want to let a positive trade go negative. Okay. EuroCAD, we're trading below our 720 here. We've got all of our moving averages down below the 720. We're pulling back now past the 50, and now we're touching on the 100, but they're very, very close together. I want to see some more movement back here towards maybe the 200 before I decide to drop my sell order here on the 50 or the 100. You can see we already have a sell order here. I actually already have a sell order here on this EuroCAD. So we're already in position here based on this 50. You can see that order is sitting right here on our blue 50. So we're going to short that. We would short that on that 50 if you don't already have an order, or maybe on the 100 once the rate moves up past there towards the 200. If it does that, I'm not going to panic. I'm not going to panic because I have a short sale, a short going on here right now. I've already sold. I'm not going to panic until this situation changes. Doesn't look like, with the distance between the 720 and the 200, doesn't look like the direction is going to change. Not at all. So I just got to be patient. I'll just be patient with it until it pays us. Euro Swiss, we're trading above our 720 here. All of our moving averages are above the 720. The rate's above the 720. So we are buyers. That's our preferred direction. We did get a pullback here almost to the 200. So we could have placed our order maybe here on the 50, or on the 100 here in yellow, or maybe here on the 50. Either way, we would have been profitable. Yesterday, we had the same thing. We dropped down here again, almost towards the 200. We could have dropped an order on the 100, or could have dropped an order on the 50. Both of those trades would have been profitable. Euro pound, we see that we're trading well below our 720 here. So our pension is to the downside. We were waiting on pullbacks past the 50 and the 100. We got a pullback here past the 200 yesterday. So we could have dropped an order either on this 200, the 100, or the 50, and we would have had basically a profitable trade. So, even up to this point, it would have been profitable. But right now, we've got to wait for it to pull back again. If it pulls back again, then we can drop our order on the 50 or the 100 to short. As far as the euro yen, we're trading above our 720 here. All the moving averages are above as well. So the upside is our direction. So we had pullbacks here past the 100 already between yesterday and early in today's trading. So our entry would have been on our 50 as a buy, but right now it's a little late because our rate is already up there. So whoever was in this trade already is about to benefit from that trade, as long as it continues to go to the upside, as it should. As far as the Euro New Zealand, we're trading below our 720 here. All of our moving averages are in order to the downside. We're waiting on pullbacks past our 50 or past our 100. We did get it yesterday. We got it the Friday as well. On Friday, we got a trade past our 200. We could have dropped in order to short on the 200, which would have been profitable. We got it again yesterday past the 200. We could have dropped an order on the 50 or the 100 and shorted that, or even on the 200, and we would have been profitable again. So like I say, these orders show up more than once. They'll show up often enough for you to make money in the markets. You're not maybe going to take a huge ton of trades, but you're going to take enough where you can probably get 1, 2, or 3 of these almost every single day. They exist almost every single day. So you don't have to worry about whether you have trades. You just need to set it up. Now, here's the Euro US. We see that rate is approaching our 720, but it's still below. All the moving averages are below the 720. They're kind of trying to set up trend to the upside, but we won't have a real trend to the upside until all those moving averages are above our 720. So our real preferred direction is still to the downside. And so our orders can be short, sell short on our 50 or on the 200 or 100 where they're sitting right now, right around this 120.28 area. Pound Aussie, we are trading above we're trading rate below the 720 because here's our 720 here. The rates right now is just a little bit below that. Our moving averages, for the most part, the long-term moving averages are still above. So we're still buyers here. So I'm going to take this buy stop that I had that was based on our 200 here yesterday, and I'm going to take this and just slide it down. I'm going to actually base it on my 50. That's a choice that you can make. I think it's far enough away from my 720 where there's commitment above the 720 if the rate moves up. And overall, the longer term moving averages are all still on the upside. So when this kind of move kind of exhausts itself, then we might get that move to the upside. We kind of had this last week. We saw this, the pound Aussie, falling all the way down to the 720. And then boom, it shot up to the upside. And there's a lot of people probably who are saying, no, this isn't a downtrend. It's in a downtrend, but didn't realize that literally the moving averages, the overall direction was still to the upside. So there was a great trade to the upside. So I'm willing to place my trade there as a buyer. Pound CAD, we're trading above our 720 here. We already got pullbacks a little bit past our 200 here early in the day. I don't know with the spread how that would have been at the beginning of the day, whether or not we would have been able to capture that, and because the moving averages are kind of close together. So we'd have to be waiting at this point in time. Yesterday, we did get a move down below the 200. So we could have bought on the 200. We had an opportunity to be profitable there. And then if we held on to the trade, we'd still be, moving profitably. Pound Swiss. Let's see if let me minimize this here. Okay, there we go. And so on the pound Swiss, I'm going to go ahead and minimize that. We're trading above our 720. For the pounds, we're probably going to see all of them above the 720. We've got our moving averages in order to the upside. They're slightly in a mature trend right now. The 21, the 8, and the 50 are kind of real close together here. But we're still, our penchant is to the upside. So anytime we pull back past this 50 and past the 100, we're going to be buyers. Pound yen, we're trading above our 720, kind of the same thing. Same deal as the pound Swiss, we're buyers. But we're looking for pullbacks towards our 100 or towards our 200 so we can drop on our 50 and our 100 to buy. Pound US going to be the same thing. Trading above the 720, full mature trend to the upside. We're just waiting on pullbacks past our 100 or 50. Yesterday, we got that. We got this nice drop off here all the way to the 200. If we dropped our order here on our 100 in yellow or this 50 in blue, either way, we'd have been profitable. We had a great profitable trade. And it didn't take very long. It took in a couple of hours, that trade's profitable and it's running and it's putting pips in your pocket, and a decent amount of pips too. More than 50, 60 pips, no, we're looking at probably from the 100, right now we're probably talking about 80 something pips. So, sometimes we're going to catch those that run really, really strongly and run really strong and really, really quick, and they're going to pay you really quick. Other times, some are going to require some patience. but some of them within a few hours, you're going to get paid. And that's what we want to do. We can break even and we just kind of let it run and adjust our stop loss, adjust our profit stop, keep it moving, right? So we can see that we are trading now on this New Zealand CAD above the 720 here. All of the moving averages are above the 720 as well. We've got the rate pulling back now. We pulled back towards the 720. So, yesterday, so we had the opportunity to buy on the 50, 100, or the 200. Any one of those trades would have paid us out profitably. At the end of the day, I don't know if we could have snuck an order here on the 50. I almost doubt it with the spread. Maybe at the end of the day, we might have been able to do it before the spread kind of changed, but we would have been able to buy maybe here on this 50 and we still would have been profitable. New Zealand Swiss, we're trading above our 720 here. Full mature trend to the upside. They're all in order to the upside as far as the moving averages go. Yesterday, we did have an opportunity here. We traded past the 100. We could have bought on this 50 or on the 100. Either one of those would have been profitable trades for us. So this happens a lot. You just have to be alert and know what to look for in the chart. You can get pips out of the market all the time. And we can probably say in the last few charts between the pounds and the New Zealands, we probably had 4 or 5 trades that we could have done just yesterday. And one of them was like 80 something pips. So they're out there. These trades are out there and it's available for you. New Zealand yen, we see that we're trading here above the 720. All of our moving averages are in order to the upside. It's kind of a wide open trend going on here, mature trend, because they're all in order. And we're just waiting for pullbacks past our 50 or past our 100. Yesterday, this one didn't get quite deep enough for us to take that trade. Unless you trade on the 21, I don't. But if you trade on the 21, maybe that you benefited from that. As far as the New Zealand US, we're trading above our 720 here. All of our moving averages are in order to the upside. We had yesterday a nice pullback to the 720 here. We could have dropped our order either here on this 200 or on our 100 or our 50. Any one of those would have yielded a big trade for us. Another big one here. So yesterday there was a lot of these, right? That would have showed up for you, and you could trade conservatively and still make a ton of money. As far as the US dollar CAD goes, now we're trading well below our 720. We have the moving averages moving below the 720. Our 200 is still above the 720. It hasn't quite jumped over yet, so we'll kind of hold off on that and see if that happens. In general, the US dollar has been weak over the last year or so. I mean, we've really been falling as far as the US dollar, so it doesn't surprise me that it returned to that direction. I got caught in this buy here, which I said I wasn't going to do, but I got caught in the buy based on this Signature FX auto trader. So I can still hang out though, because of the fact that the 200 is still above my 720. My upside is still preferred. It is the preferred direction. Manually, if I was taking this trade, I wouldn't take it because I'd only take a short trade. All right. So now looking at this US dollar Swiss, you can see that we're trading above our 720 here. All the moving averages are above the 720. Raw technical analysis, I'm going to be a buyer here as the rate is below our 720 on our 50. Our rate is below the 200. I'm sorry. I'd be a buyer on any one of these long-term moving averages. But it's dollars, so if I'm a manual trader, I'm not interested for the reasons I've mentioned. Now, US dollar yen, from a technical standpoint, we're trading above our 720. All of our moving averages are above. Same deal as the US dollar Swiss. If I'm going to be a buyer, I'm going to buy on my 200, my 50, or my 100. So it's pretty quick. It's a pretty quick analysis for you to do. This is not something that should take you all day long. I saw some things, this weekend. I saw a guy in a Forex group that a friend of mine has. I saw him saying, oh, who's going to spend, time on the charts this weekend or whatever. And a lot of guys were like, they're not spending any time on the charts this weekend. We don't really have to do that. The only thing you really have to do is get in your mind, okay, how do I find these trades? And by coming to these shows, you're going to find out how to get these trades. we did this analysis. Right now it's what, 11:36 or so. So, and I didn't even start to like maybe 15. So in like 20 minutes, you can go through all of your charts, all like 20 of these charts, 22, 24 of these charts, whatever it is. And you can analyze every single one. And it's only going to take you like a minute and a half to analyze it. Once you get good, it's going to take you like a minute and a half. And you can place that trade just as quickly as, quickly as I can. You're going to be able to do the exact same thing. And that's what I want. And you're going to do it with confidence. You're going to know exactly why you placed the trade. You're going to be able to go back to, last week and say, okay, this is the trade that I would have taken. And it's going to be the same place, basically, you would have taken it, because the moving averages don't repaint. So they're always going to be an average of the price. So that's not going to change. It's an average of the price at that time. So that's never going to change. So you're always going to go back and know exactly why you entered a trade. And it's very, very simple to execute. So I hope that you got some great ideas for how you want to trade going forward this week. I'm, happy to answer any questions or any concerns that you have, or if you're doing well, let me know. I'd like to hear that too. So we need testimonials and things like that so that we can gain more customers. If you have more friends and individuals who think they want this, type of information, or they're struggling a little bit with trading, or they're, intimating to you that maybe things aren't going so well, send them our way so that we can get them on track and that, they can enjoy the market. The worst thing is for them to actually come across a great market like Forex, not know how to like harness it, and then walk away from it, not realizing they're walking away from a little pot of gold, something that could be very good. So I appreciate your time, your patience with me here tonight. I hope that y'all are having a great trading week, and we will talk to you soon. Have a great one. Bye-bye.